please. Great. Okay, so welcome everybody to Tom Williams' session here in the UK. So here it's the afternoon, of course. Hello to Sebastian. Did you say Sebastian's in the room? Yeah, hi Sebastian. Right, okay, Tom, over to you.
Yeah, thank you for that, Peter. Thank you, Rita. Tom Williams here. Thank you for tuning in, listening to us. Gavin been here all week, but he's just left yesterday. And apparently he's off to the city of Bath for the weekend, which is a Roman city with Roman baths and all that stuff. His wife's American, so of course they love all that sort of stuff. Anyway, let's get going. Now, what we've got up in front of us is an hour. Is that an hour or 30 minutes? Sorry, 30-minute chart of the S&P 500 future. Now you can see we've been in a fall, dramatic fall here. Well, it's not too dramatic, but it's certainly a down move. We were expecting that from last week's seminars and newsletters. We noticed that the daily chart, which I'll show you in a minute, hit the top trend line, and it was likely to come off. Now, when you look at these hour charts, or any chart, a weak chart, in other words, a weak market, right, is hallmarked, right, by what we call upthrust. There's one there, look. Well, supply coming in, it's all much the same, right? It's hallmarked by upthrust, no demand, red arrow bars. These, there's no signal on these, but I'm sure it's no demand, right? It's also riddled with what we call, Gavin calls gotcha bars. These huge widespread down bars, like that closing near the low, is not caused by news, it's not caused by something going on. It's deliberately created by professional money to lock as many traders in these high positions as possible, and also stops them. They panic and they won't go short because they think they've missed a move, and that's why we call it a gotcha bar. So it's these weak markets are hallmarked by upthrust, supply coming in, no demand up bars. These gotcha bars, right, even though here, right, it started to go up, but if you look, there's an upthrust there. There's no signal on this time frame, and I'm sure there is on the others. So down it comes, another gotcha bar, look, bang, goes down. But of course that's an upthrust there, another one, quite an obvious one, look. And here some support been coming in. Right, it's been going roughly sideways since on that support. Hang on. Right. Right, so there's the first support. Look, the support will appear on very high volume. Look, there's one there called, admittedly that's the market opening in America, but it's still high volume. And on that, look, it plummeted down. It closed in the top quarter of the lower part, but still signs of weakness there. But here, there's some more support. Volume is still relatively high. On that high activity, don't forget it's activity. Activity of the professional money. It's closed again in the top quarter. Top of the lower quarter, if that makes sense. Right, but they will be accumulating, they will be buying. It's not ready yet. This is what we call a weak looking bar. We note, although it's supposed to be a down bar because it's red, and the volume is, our activity is low, look. So it's not a lot of follow through selling pressure there. But what makes this a weak bar, a weak looking bar, is because it has what we call a top tail look. This means it went up there in a lower time frame, has obviously hit no demand. There'd be no demand signals on those in another time frame, I'm sure. Right, so that's quite normal. You've got some intervention coming in, some support look, but they're nowhere near ready. And that's what they have, is weak bar look. Now this looks more like a test bar. Here, continue with the strength a little bit. Looks like another test bar look. Now the volume's a bit lower, and that's where we are at the moment. So it looks as if support's come in. You could draw a trend line through these highs, Peter. There. Yeah, with a trend, this will only be a very short-term trend, of course. You locate, that's it, the first two highs and the first low. And you can always get rid of those. That's it. Is that it? That's it. Yeah, that is a low, isn't it? Yeah. That's it. So there you are, look. So we can see that the trend obviously is down, but I find it difficult to look at a chart without trend lines on there. It's almost like you going for a cross-country ride along one. You feel uncomfortable as you've got a map. Okay? Now, we can see there's some support come in, but the market's completely hesitating and going sideways. There's a load of weakness in the background, look. Now, we'd love to hear your questions. If there's got anything, Rita's look at her screen now. She'll read anything out. Are there any questions about this chart? It's an hour chart. No, 30 minutes, sorry. But the hour shows you the same thing anyway. Right, hang on.
Hi everyone. Yep, we've got two questions, Tom. The first one, I'll read them both now, okay? I can remind you. Winston would like to know, how do you determine a support bar? And Jack would like to say, please could you explain if we have any indication to tell if we are heading down for another gotcha bar or a successful test of high volume?
Right. So read out the first question again. How do we determine a support bar? Well, a true support bar is very, very, very easy to see. You need a down move. Now, this is obviously, look, a down move. Right? Now, when your support comes in, you'll see the market will lunge down with a red bar. In other words, it's down bar. However, you note that the spread, that's the difference between the high and the low, has certainly become narrow. Right? And you look at the volume or activity, and lo and behold, it's very high. You know the only thing can cause that is the professional money has stepped in, anticipating that they can make some money on some sort of up move. But the fact is the market has fallen, makes the market what we call, it's vulnerable to that happening. It's only logical common sense, isn't it? Once the market has fallen considerably, it stands to reason that if it was possible to make a little bit of money, professional money will step in. But they can't hide their actions. They won't tell you they're stepping in, no way. Right? But when you see a down bar into what we call fresh low ground, that means there's nothing immediately to the left. And it closes, usually closes in the middle, and the volume and its activity is very, very high, Only one thing can cause that intervention by professional money coming in with thousands of contracts buying. Now, if you can tell me anything else, I'd like to hear about it. You can be rest assured that's what is how we know there's some support. However, you don't buy on that because you want to see that tested. In other words, you may see one or two up bars, you may see a little up thrust, and now you want to see the market falling, then back down to that level. The level's important, right? Where you first saw that stopping volume. If on that level the volume is really obviously low compared to the stopping volume, then you're going to get an up move because the market worked on supply and demand, right? There was some demand and supply at the stopping volume, right? It went up a couple of bars sideways and down, and now because the volume is low at that level, obviously it can only mean one thing: professional money is not selling. The activity is low, and if the market will go up because the market works on supply and demand. What was the other question, Rita?
Please, could you say if we have any indication to tell if we are heading down for another gotcha bar or a successful test of high volume?
Well, normally those gotcha bars are obviously designed to trap you into what we call weak holders. You become a weak holder. A weak holder is a trader that if he sold right now, he'd lose money. And traders don't like that. Now, professional money know what they're thinking, right? You might say, well, I'll never do that, but statistically you do, right? That's all they're interested in. Statistically, what the crowd, the herd does, right? Now, right at this stage of this chart, we're obviously hitting that lower trend line. We've seen a bit of stopping volume. We've seen a few green arrows. You're unlikely to see a gotcha bar right now because the market's not that weak at the moment. But it's not that strong either. Okay? So, but as you get to read these charts, remember, a chart is a language. It's like reading a book. It's talking to you. It's really like Braille. Instead of dots and all the rest of it, right, the language of a chart is in the high, low, close, and volume. That's why we call it volume spread analysis. And it's there, it works. You can see here. The fact is we've got automatic signals that appear that will be made a lot better because we have a program available now. So if you think these signals are quite good, right, then you must have fed in the correct information to the computer in the first place, because computers simply do not understand mistakes. You've either got it right or you haven't. That's all the computer's concerned about. And any arrows, some of the green ones appear, but we are trying to fix those. But of course, I haven't had a programmer available. But we have now, or will have soon. Okay. Any other questions, Rita? You'd like a different time frame?
Jerry says, Tom, in the past you commented that VSA is not necessarily an entire trading system, but it is a great hand holder. Can you speak on that a little? And also he says, also please come back to the United States again.
Well, I wish I could go back to the United States, but I'm 86 now. And you start creaking at the joints at this age, and it's not easy to jump on planes as you get older and start traveling like that. But we do have a big seminar in London on the 8th, and if you want to meet us, yeah, 8th of May, I'd love to see you. May, nice month. In London, the weather's beautiful. But anyway, if you want to know any more about that, you have to talk to Trey Guider and Gavin Holmes. I'm sure they'll gladly give you all the information. But now, I said, right, the beautiful thing about VSA is what they have done, they've launched, thanks to Gregory, our new programmer, a new version that works with Infinity. It's a big brokerage house in America, Chicago. And what I like about it is, I mean, you could be sitting here watching this hour chart and you've been told to do nothing until you see a principle appear. But you might sit here all day waiting for a principle that you recognize. But this new software is searching many, many time frames and many, many instruments in the background, and will alert you when a setup appears. Then you can physically go and check it out yourself. Computer's usually correct, but you can't obviously trust a computer 100%. You have to look at it physically yourself. And so I certainly like that about it, definitely, because you'll find that when you start trading actively, you could sit here hours looking for a principle, you know, like an upthrust or something, whatever. And but the new software alerts you. I believe it sends you an email, right, telling you that there's something going on, and then you can physically go and look, because there could be no end of opportunities there during the day. And what I say is that why I say it's a hand holder is the signals, because when you see a signal appear, an automatic signal, it must have been a reason why it was there, right? It will give you reassurance that it probably is right. Alright? So it kind of holds your hand. It gives you, say, okay, don't be frightened. If there's an upthrust, it's almost guaranteed to be right. Alright? I mean, Rita here, she trades upthrust, and she does very well, thank you very much. And Peter's also very good at trading now. I mean, I'm sure if you ask some questions, they'll tell you.
Christian is asking, does a gotcha bar have another meaning if it has ultra high volume?
Well, when you get these down bars of very high volume, it occurs immediately after you've seen red arrows, and you assume it's near the market top because you've got an up move behind you. Then the red arrows come in and the up thrust and then all the rest of it, right? then you assume, yes, it probably is a gotcha bar. They mark it down deliberately, close near the low or even on the low, because they want to trap as many people as possible into those higher parts. In other words, they become weak holders. A weak holder, I say, is a trader that if he sold right now would lose money. Traders don't like that. And there's natural tendency to think, ooh, God, no, as soon as that goes back up there, I'll get out of here. Right? Now, they know what you're thinking. So they call it the crowd behavior, the herd. Right? And that's why, usually, in these down moves, you'll see these persistent red bars with gotcha bars in it. And, of course, up thrusts are there to trap you as well. I mean, Gavin and I was looking at up thrust in the chart, I think only yesterday. And it puts you right off, really. You may have gone short, and suddenly the market starts moving up. And you think, oh my God, but you can't possibly know, you know you're not wrong because of the weakness there. That's why you shorted it. And lo and behold, after a minute or so, bang, off it comes again. It's an upthrust. We saw that definitely very clearly yesterday. But these gotcha bars, that's really all I can say is that when you see that, it's done deliberately to create as many weak holders as possible. Because if they can lock you in on these down moves by having a gotcha bar first, and then perhaps they may go up a few bars, and that starts giving you hope. You think, oh, look, it's going up. Right? But then you get an up thrust and bang, off it comes again. That's to their benefit in the long run, because sooner or later, because of herd behavior, because of crowd behavior, the public, who are also all listening to the same news, by the way, will uncannily start panicking together. I mean, you individually may not, but as statistically, they will panic and start selling. Professional money, that's what they're waiting for. Because as the market plummets down, they say, thank you very much, I'll have a bit of that. And that's where you start seeing the stopping volume coming in. But herd behavior is a very important aspect of understanding how these markets, why they behave the way they do. If you think carefully about it, imagine you are a professional trader. Would certainly be of great interest. But you are skillful already about herd behavior in ordinary life. You know when the best time to go to the post office when there's no queue, or when it's the least busy. You know driving home from work or to work, the busy times, because the herd does the same thing all the time. Statistically speaking, that is. I mean, you personally might be ill and not go to work, but there'll still be the same amount of congestion and traffic there as people try to get to work, usually at 8 or 8:30 in the morning. But the same thing goes on in the stock market, in their way.
We have a request for the daily S&P. You need to put the end of day. Well, they haven't said that, but I'm saying that because we keep. Yeah, but Tom, the volume is wrong on the future. It's well, fine. So is this to finish?
Well, there's not really a lot of mushroom shape there, is there? I mean, this is the S&P daily future, look. And we looked at this, well, we've been looking at this for the last several weeks, haven't we? In the newsletter, one thing or another. And we certainly noticed, I think I remember talking about it here, that this was liable to hit that top trend line and might even become overbought. And that's what's happened, look. The trend is, in a long term, is down at the moment, look. Now, when you look at this daily chart, this looks like a gotcha bar here. On a daily basis, look, this means that there'd be a lot of people locked into this market that were long. They may have been clever enough to get in down here. They may have been praised themselves. And then bang, suddenly this happens. Also, it stops people shorting, because what happens is, oh yes, it might probably going to come off on that trend line, but you hesitate. Well, we'll wait tomorrow, see what happens, right? And then bang, also once that happens, then you think, oh, it's gone down too far, I've missed that short position. But of course, if on the daily chart you start getting no demand as it crawls back up, then there's the time you can short it. But there's not mushroom shape there, there's none of it, not enough there. There's weakness.
Mark is saying TradeGuider has been corrupted on my NinjaTrader program. I'm unable to open any charts and it shuts down the entire program. Peter?
Yeah, that comment caught my eye. I was trying out TradeGuider myself NinjaTrader a few months ago, although I wasn't using any plugin, and it did the same trick with me. So I couldn't fathom out how to repair it. So in the end, I rebuilt the Windows machine, but because it's quicker that way. So what's going on there, I don't know. I'm not saying it is NinjaTrader that has the problem, but contacting their support or TradeGuider support or both obviously must be the way forward. That would be my best advice.
Dean is asking, how do you strategize trading up thrusts? How do... Oh, hang on. Mark is not getting any response from TradeGuider support. Then I would contact... It depends how you're contacting them and when. I mean, why not email gavinh@tradeguider.com and well, AJ apparently is the best, but Mark is not getting a response by email from them. So I would suggest, Jerry is suggesting use the live online. Court is saying Skype, that works. And Alan is saying Infinity VSA charts are not working either. Is there anything there, Peter, you know about?
Yeah, well, if that's the case, Alan, thank you, Rita. I wonder if there's some other underlying problem. So I would say you have to contact AJ on Skype. I think it goes under TradeGuider on Skype, and Gavin Holmes, gavinh@tradeguider.com. In that case, just to see what's going on. I mean, for all I know, AJ could be off today or yesterday or whenever it was you tried to contact him. I don't know. So we don't know here because, of course, we're not directly involved in any of the software. So we see what you see, basically. But that's my advice. Contact Gavin.
I'm just reading. Grigory is saying it is correct. Old platforms are having problems now. New ones for Infinity have been released to beta testing, and public release will be done shortly. Right. Grigory is our new programmer. Sorry, I'm just reading. There's a lot of stuff coming through here. AJ at TradeGuider. Isn't it support at tradeguider.com? Okay. Someone saying regarding Infinity problem, I think on yesterday's webinar, Gavin launched a new Infinity platform, as Gregory said. Okay. Right. Down to the question that I was about to read. How do you strategize trading upthrusts, and do you have an alternate for stopping volume?
What? Say it again.
How do you strategize trading upthrusts? Do you have an alternate for stopping volume?
Well, it's either there or isn't there. You don't, as far as upthrusts are concerned, right, when they appear, you recognize it as an upthrust, and you can short it. Isn't that right, Rita?
Yeah, I can see something.
Well, Rita trades them all the time. And there's no alternative to stopping volume. The computer may call it climaxic action, stopping volume, even testing. There's a few different versions of the same thing in a way. Basically, the market plummets down after you've seen a bear move down, right? It plummets down. The lower end is the low, fresh ground. That means there's nothing immediately to the left. That means that the volume action is pure, shall we say. It's not contaminated by any activity needed to cope with what's happened to the left of the chart. So it's down in fresh low ground. It's usually on a narrow spread closed in the middle. Now sometimes climaxic action does the same thing, except the spread is wide, and that's usually based on news, of course. Some bad news, so-called bad news, appears. They ram the market down as far as it'll let them, only to rebound, close up usually in the middle. The volume will be very high, and that can be usually marked as climaxic action.
Okay, yeah, so for upthrusts, there's another question came in. Do you go short on the next bar after an upthrust? Yeah, well, everybody is different. It depends on your confidence. It depends upon how many ticks your profit you're looking for. It depends on if you're scalping, all sorts of things. Tom would say if he saw an upthrust, he'd immediately go short. Me, I would be looking for confirmation of it, but I'd be looking for confirmation in, say, a 10-minute bar or 15-minute, 20-minute bar or higher if I could, but because I'd be looking for 20 pips out of it, something like that. So I would be looking for confirmation. I'd want to be looking for weakness first in the higher time frames, and then confirmation down in the lower time frame to confirm it. So that's what I would do. On our previous question about software problems, Gregory would like to say, in case of technical questions or problems, please contact AJ at the support address. Please also note that TradeGuider, end of day and real time are working properly. And Alan, I've seen your comment, and I'm going to email Gavin actually after this seminar, just to pass on your comments. Okay. Winston is asking, are upthrusts and no demands confirmation bars by themselves, or do they support other indicators or conditions?
Well, of course, that can be a bit of a mixed bag. An upthrust, as far as we're concerned, a true upthrust, a genuine true upthrust, right, has to have what we call weakness in the background. And the upthrust is there. The professional money know perfectly well the market's weak because of the indications that happened previously, right? You may get the high volume and up bars or something like that. And they know that as professional traders, if they can mark that market up, right, it'll catch a lot of stops. Don't forget, there are not hundreds, but there are thousands of stops above and below these S&P 500 charts, right? If they can mark it up, right, trigger off many, many stops, which they will do and do, right, that's going to make profits for them. There's a lot of money in catching stops, believe me. Okay, so really, a true upthrust occurs after you've seen a sign of weakness in the background. It may only be 5, 6 bars away, I don't know, whatever. But once you learn to read these charts, then your skill as a trader, then that's another hurdle you've got to kick in. Because it's all very well reading the charts and knowing when it's going up or down, but you've got to be able to take advantage of that. And then you're up against human emotions, doubtful, I wonder if, and all the rest of it. You know, all sorts of obstacles appear because you're trading money and you don't like losing money. Everybody's like that. All right, that's why I say that it's a good hand holder, because you're probably going to be right. If it's a genuine upthrust, it's almost guaranteed to be right. What was the rest of the question, Rita? Or was that it? Oh, that's right. Well, they do support the weak bars that have occurred in the background. Now, the thing is, you see, what we mean by that, if you could get a bull move where the market's merrily been marked up on a 5-minute chart or so, and suddenly you might see an upthrust, what looks like an upthrust. But it's not an upthrust, because you haven't got weakness in the background, you've got strength. And very, very often the market is marked up, then suddenly it rests and falls back down for another rest, while professionals take stock, I suppose. And that may look like an upthrust, but it's not an upthrust, because for a genuine upthrust, you have to have weakness in the background, not strength. Okay? Now, often, we've mentioned this before, it happens very, very often. If the market's in a bit of a bull move, and you suddenly see, it's usually, what it always is, a red arrow appears and it's called no demand. That's the lesser of the evils. It means that the market's just resting. Now, if on the very next bar you see a test is a down bar, narrow spread, closing in the middle, and volume is less than the previous two. That's a test. Immediately you see that after no demand, that thing's definitely going up. There's no question about it. Now, I'm not sure if that's been programmed in properly at the moment. But definitely a guaranteed indication the market's going to go up.
Okay, Jerry would like to know, how does high frequency trading affect VSA traders?
So-called high-frequency trades doesn't make any difference at all, because you can see that, because very often, if you look at a 1-minute chart, right, it still works 1 minute. It works just as well as an hour chart. So VSA is very, very quick at picking up all these indications of weakness, upthrust, and they all appear on the hour chart. Years ago, I remember I had the ability to change a chart into a 1/4 minute chart, right? In other words, there were 4 bars for every minute. I was just experimenting. Lo and behold, all the signals came up just the same. So it's amazing, really. So this so-called high frequency won't make any difference at all. Might even improve it, might even make it better. Incidentally, talking about that, I also had a chart of every quarter, every 3 months. And that worked. That came out with fantastic signals, all the same, which is, that is a great hand holder for you. You try it yourself if you could manage that.
Winston, confirmation I would look for when trading an upthrust would be no demand. Right. Leslie said he's observed that short covering seems to result in little or no bounce versus true buying.
What's that?
He's commented that short covering seems to result in little or no bounce versus true buying.
Well, I don't know about all of that. I just go on the signals created, because all I'm interested in is the market weak, or is it not weak, or is it strong? What's going on? But all those very finer points that you just mentioned will probably be part of your skill, which will develop. In other words, your skill as a trader. I'm sure some people are very, very quick at picking all that sort of stuff up. But once you've learned to read these charts, then to start turning that knowledge into money, then your skill as a trader needs to kick in, definitely. It can be done. It is done all the time.
Steve would like to take a look at crude oil. Could you put crude oil up, Peter?
Right, crude oil. What's that daily chart, Peter?
I'll just do an update. Stand by.
Hang on, we're just doing an update. Oh, yes.
Right, so that's up to date to yesterday.
Well, as we can see, there's been certainly some strength. I mean, look, that, funny enough, that bar there, look, which appeared after that red arrow. And look at that gap up after it. So, of course, crude oil is definitely under some sort of pressurized trading going on. But this very last bar, look, it's gone up, a narrow spread. Well, there's a bit of selling on that, look. But this is the increase in volume one here. I would say, and look at this test here, look. This one, look. Down bar, look. Narrow spread, close in the middle, just as I told you. Volume less than the previous 2 bars. When you see that, that's going up. It's going up between these trend lines here. I'm not sure where the top trend line is, but that looks at the moment, it's been trying to go up, but there's a little bit of selling at the moment going on. But if you see a test, so it'd be a red down bar, especially if it looks like that, look. Or even that means that market will go up. Not that one, but this one, look. This is a real test here, look. And these here, of course. Can we see a little bit more so we can see where the top trend line is? Oh, yes. Well, that doesn't look very good now. I think you could get rid of those trend lines, Peter. Don't be frightened to remove trend lines that are no longer working. Now, new ones, here, here, and the first high. Don't be frightened. We used to... That's it. Now, that's interesting, look. Now, that's the new trend lines. Wyckoff Way, it's the first 2 points of support, the first high. That's it, look. And now, when you look at it, I said there was a little bit of supply hitting the market, and it probably would do because it's becoming oversold, overbought. Keep getting that wrong. There. But if you see a test, that's going to go up. But I can't see any real serious signs of weakness here at the moment. But markets do follow these trend lines. So you want to be careful. You should buy on the low of these trend lines. Not thinking of buying up here at the top unless you see a nice clear test or something. Then it'll go up.
Christian would like to know, are pivot points worth paying attention to?
Well, I don't use them, and apparently they're very, very good. I had them put in from some expert years and years ago, and to be quite honest, I never used them, but apparently they're very, very good, and they do work. But that, again, is your skill as a trader. You put the pivot points in and test them and get used to them and see whether they do in fact work or not. For you, that is. I mean, I purely just look at the strength or weakness. If it's strength, it's going up. If it's weakness, it's coming off. That's really all I really look at. But all this other stuff, pivot points and that, it's all great stuff, but I'm not sophisticated enough to start delving into all that, although I had them put in. But they're very good, apparently.
Leslie is suggesting drawing a new trend channel using the 1st of April low, Tom, which is here, and the 10th, which is here. So, yeah, hang on. Let's...
Short-term intermediate.
Right, hang on.
First high. That's it.
Let's make it. So, Leslie says, would you buy on a new trend channel like that?
I mean, you buy, but you don't buy on these top trend lines. You buy at least on the lower line if you're going to, and only then when you see a sign of strength appearing.
So he's commented it is still above the trend line, the final bar there. We've gone through the...
Yeah, I mean, you can draw these trend lines. That's we call that a short-term intermediate trend line. That's fine. But your ability to read these markets, that'll all kick in with experience. But these trend lines are great guidance tools. They're like a map. Now, you're not going to rush in and buy when it's right on the top trend line like that, and it's overbought on the other one. But you would buy if it suddenly had a clear test, a principle appeared. Then you probably buy it. If you suddenly saw a red bar, down bar, narrow spread, closing in the middle, and the volume was obviously less than the previous two, low in other words, that's going to go up. Then you buy. But you certainly wouldn't buy now up there, would you? And that's what's good about this new software that Gregory's developed, is it gives you alerts on these principles appearing in the many, many other vehicles and charts that you have. So you're not trying to, as they say, get blood over a stone here if there's nothing happening. That's the great thing about the program. Yes.
You want a particular time frame, Tom? That's what
Put the half hour.
Yeah.
Right, apparently Rita says we're running out of time. But it's just going sideways. Look, the market. We've got a little bit of stopping volume. Of course, here was when the American market opened. You'll always get a surge in volume like that. It's hit that lower trend line, look. It's a weak looking bar there, look. We saw that. Now, I'll tell you what is important, though. You can always tell if it's still weak, is that usually, well, these blue bars, look, that's gone up a little bit. There's a bottom tail to it, so they try to test it. Right, the volume is certainly high-ish there, right? But the very next bar, look, is a test, and the volume is quite low. So that would indicate it's more likely to go up than down at the moment. So nothing dramatic happening. It's basically going sideways, look. But it's quite liable to go up and hit that top trend line, look. Somewhere along here. And you've got all this weakness behind you. Now all that weakness must be there for a reason. And until you see some very high volume, stopping volume coming in, right, that weakness is still there. It's looming over you there. If you see an up thrust or anything here, then that could be a possibility for a short. But it's just going sideways, look. Not a great deal is happening at the moment. Can you put a 5 minute up? That's sometimes a 5 minute. Yeah, even that's zip signing is going sideways, look. It's a 5 minute chart. Every time it tries to go up, look, there's no demand here on these blue up bars, and that looks like an attempt to upthrust, look. So this is the reason why it's going sideways. You've got a mixture here. Some bars are strong looking, some are weak. That's going sideways, and it doesn't look as if it's going anywhere at the moment. It's Friday, so you've got to be very, very careful, because they'll pull the wool over your eyes if at all possible. So you think wrong over the weekend. The newspapers and TV gets it wrong. Because you don't get accurate information. You don't get professional people say, oh no, that's weak. And don't forget, because it's Friday, it means that Monday or Tuesday, if this market is strong, if it is, that is, right, or intends to be strong, they will test. They will have a test. That's a down bar. Don't forget, a test will be a down bar, red down bar, narrow spread, close in the middle, volume less than the previous two. Then you expect an up move for the week. If the market is weak, come Monday or Tuesday, you usually see it go up on no demand. But check all the different time frames. All the information's there somewhere. You've got to ferret that and find it. But the market is not going anywhere at the moment, that's for sure. It's been going sideways, look. It's hallmarked by some strong bars, some weak bars. But the weakness seems to be slightly higher than the strong bars, especially with that background information. Anyway, I'll say thank you very, very much for listening to us, and I do hope that all this gets through to you, because once you've got all this information, you have that skill with you for the rest of your life. And I can tell you right now that you will never, ever regret it.
Okay, thanks, Tom. So don't forget, everyone, we're doing our newsletter on Sunday. Is that right, Tom? Yeah. Which Rita types out and sticks on the VSA Club if you're looking for it under newsletters once you've logged in. So with that, we'll say thanks very much for coming along, and we look forward to seeing you hopefully next week at the same time. So have a good weekend and see you soon.